Hello there. This is James, and you're watching OneRoyal, and it's live. In today's program, I want to discuss how the market is feeling about a certain event happening this week, a so-called special day for America. Plus, I want to talk about my favorite asset and how it's making me so proud. As well as that, a little bit more doom and gloom of people expecting worse things to come in the future. But before we get into all of that, don't forget, these little videos are for educational purposes only, and in no way whatsoever shall be taken as financial advice. I always suggest you do your research, do your due diligence, and of course, know the risks at hand before entering any trade. With that out the way, let's get started. Just notice I clicked the wrong banner at the beginning. But anyway, so it begins indeed as the market prepares itself for Liberation Day. Liberation Day for the United States of America, apparently. But here's the thing. Liberation Day is apparently pretty much shrouded in mystery. Now, we all know what this day is supposed to be about. It's the day that Trump will announce to the world a number of reciprocal tariffs and further tariffs and things like this. This is all about to happen on the 2nd of April. But here's the thing. None of us really know what they're going to be. You know, because don't forget, only last week, the market had the impression that he was going to be slightly lighter on tariffs, a bit more lenient with tariffs. But then Wednesday last week, he dropped the bombshell on the 25% tariffs on automobiles from foreign countries. You know, now he has said for certain that it's going to be tariffs will affect all countries. But here's the thing. He's also said this. People are going to be pleasantly surprised at how fair and nice the duties are to other countries. Okay. So we're trying to double guess what's actually going to come out on the 2nd of April. Some believe we may see reciprocal tariffs on agricultural goods and tariffs to resume against Mexico and Canada, etc. And then, of course, is the big one, which is the real one, which is really scaring the market, and maybe the market should be even more scared, is, of course, is happening on April the 3rd, which is 25% tariffs on foreign automobiles and auto parts. And the auto part tariffs are supposed to start on May the 3rd. Now, this is the thing which is really, really worrying, because this is quite a major deal. And one analyst from Barclays, they said that these 25% tariffs on auto tariffs on foreign vehicles is a bigger deal, was a much bigger deal than the market, is making it out to be or taking it into account. Maybe it hasn't fully priced in the impact on this. Now, we did see last week, as soon as these tariffs were announced, it wasn't not just European cars or Japanese cars. US cars came under pressure. Share price across the board for almost all automakers came under pressure last week. And this is the big thing. This is the thing which is really bothering the market, obviously, because it's just this fear, total fear of unknown, or what these tariffs are going to do to the market, or what they're already doing to the market. Don't forget, this month it's been, or this quarter even, it's been terrible for the markets. In the last 5 days alone, the S&P 500 is down 3%. Dow Jones is down 2%. And NASDAQ is down 4%. It doesn't end there. The Max 7, the Max 7, the crown jewel of the US stock market, they're all suffering terribly as well this month. This month, Meta down 12.57%, Microsoft down 4.83%, Amazon down 10.34%, Google down 11.80%, Nvidia down 15.63%, Apple down 10.82%. So you can really generally see how this tariff is really, really, really spooking and scaring the market. And like I say, it's looking to close out an absolute miserable quarter one. But let's have a quick look at the market, how the market's open, because it's been open now for just over 30 minutes or so. So let's start off with the S&P 500. Again, like I say, it's had a horrendous first quarter. For the day, it's opened lower with a gap. Current trading 5,529 points. For the month, like I say, it's down quite, over nearly 6%. I mean, if you have a look, year to date, it's down 6.47%. So it's not much better either with the Nasdaq as well, which is also open lower with a gap. Obviously, the Nasdaq is tech. It's a tech heavy, isn't it? Of course, it's all to do with tech. And obviously, the Max 7 is tech heavy. And then you can see the same again also with the Dow as well. Not as dramatic at the moment, but yeah, it's getting a terrible quarter one. And you can see how the market is feeling, because look at the VIX. Look how the VIX is performing. Look how the VIX is performing. It's opened with a gap, 23.68. And don't forget the VIX, it's a fear indicator. It tends to rise when the market is scared, when the market is spooked. So again, there's a clear sign that obviously the market is very, very on uncertain ground. And it's going to continue a little bit like this, because not only is the tariff problems, we've got economic data as well to start to consider, as well take into account. I mean, the latest consumer sentiment survey showed expectation from the consumers for inflation over the next year has jumped to 5%. That's the highest level. That's the highest level since November 2022. And here's the other thing. As well. Consumers are concerned about the labor market, with 2/3 of the consumers expecting unemployment to rise in the year ahead. And this is the highest reading since 2009. That was the height of the credit crisis. That's when we had headlines of Lehman Brothers closing down, etc. Live on the telly, people packing up their offices in cardboard boxes. Major financial institutions under horrendous pressure. And yet, the consumers now are concerned that there's going to be unemployment rising this year. And that's the highest amount since the credit crisis. It's not just that, though. It's not just the consumers, obviously, of course, driving this. No. There's really concern about GDP growth. GDP growth, real big concern. Goldman Sachs, again, has cut their expectation, not only of the target of the S&P 500, so they've downgraded again, but US GDP growth as well. We talked about this. Atlanta Fed now predicts US GDP growth of quarter one to be negative 1.8%. 1.8%. So there is a lot of, a lot of fear and a lot and trepidation about what is happening in the market. However, However, there is someone who is doing pretty well and is performing quite well. And I'm, like a proud father, I'm extremely proud of it. And that is, of course, gold. Of course it is. It's gold. I mean, again today, it hit a new all-time high. A new all-time high, and it's actually gone higher than that since I wrote that. It broke $3,100. I mean, this is an incredible run. In fact, excuse me, this tariff fears is setting up the yellow metal to be. Sorry, this tariff fears is setting yellow metal up for the best quarter since 1986. 1986. All this concerns with tariffs. Gold is shining bright. It really is. I mean, gold itself is up 18% so far this year. We're only in quarter one. Last year, gold was up for the whole year 25%. 25%. So you can really see the flight to safety is really, really on show here. And in fact, let's have a look at it. Let's have a little look at where we are at the moment with gold. And as you see, like I said, today we broke the $3,300 level. Okay, just today. And we actually hit the new high of running just under $3,130. Currently, we're trading at $3,114. So this is, clearly is the flight of safety is fully on. It is really, really on. And unless we get these fundamentals start to change, where we start getting less concerned with tariffs, but even then, even if we do, we're going to start looking at economic data, and they're going to get the headlines more than tariffs. Like I say, at the moment, it's maintaining the momentum, and it is still, really above that potential uptrend trend line there, which is, holding firm. And like I say, if we have a look at it over the last couple of trading sessions, it's been hitting new highs almost constantly. As we build up to April the 2nd, that's going to be a really big thing. So it'll be interesting to see, what happens with that. And like I say, gold at the moment is really, really benefiting. And like I say, it's set to have its best quarter since 1986. Up next, of course, it's not just about tariffs. Let's talk about something else. But up next, of course, is the job market as well, of course. The big one this week, we have U.S. non-farm payroll, which is on Friday. Expectations 139,000. So we're expected to see a slight, a drop in growth. Previous figure was 151,000. I will be doing a watch along for this on Friday, so do come along and join me. Those who are not familiar with watch alongs, it's a live broadcast. We go on usually 15 minutes before the event. We talk about scenarios. We talk about what the market's going to be looking for, and then we watch, obviously, it unfold. Hopefully, it will cause a bit of activity in the market, because watch-alongs are no good when nothing happens. But hopefully, it will give us a bit of activity, and I have a feeling this one will. As well as that, coming out on the same day, of course, we have U.S. unemployment. Expectation is for it to come in at 4.1%. Previous reading, 4.1%. But like I say, it's not just that. Though the job data is the main thing this week, we've got a lot of data coming out, which is going to be, unfortunately, overshadowed by this whole tariff story, drama, you call it whatever you want to call it. But all the other data coming out, we've got German CPI, RBA interest rate decision, EU CPI, US global manufacturing PMI, US ISM manufacturing PMI, ADP employment. Okay, it's not as big as NFP. US ISM non-manufacturing PMI, and of course, US NFP and US unemployment. So we're expecting a action-packed week ahead. Don't forget, this is a live broadcast. And if you're watching me on YouTube, you can ask me questions anytime you like, or simply say hello if you like. Or show me your opinions, because the whole point of a live show is that you can share your opinions, we can discuss and share ideas and things like that. So feel free to do that whenever you wish. And don't forget, if you're watching me on YouTube and you're not watching me live, but you're watching the recording, because I notice a lot of people go back and watch the recordings later, and unable to watch the lives. If you have a question or if you have an opinion, put it in the comment section below. I will see it and I will reply to it next time I go live on air, which will be Wednesday this week, because I'm not working tomorrow, but it'll be Wednesday. I'll be back online again. So feel free to, come and join me on that. As well as that, if you indeed are watching me on YouTube and you like this sort of thing, by all means, subscribe if you like. Hit the notification button so you know next time I'm going live. And if you like this type of content and you've put up with me, by all means, give me one of these. At the same time, if you're watching me on Twitter and you quite like this sort of thing, put up with me, etc., by all means, give me a little heart, etc. Anyway, if there is no questions, not a problem. Not a problem. All I have to say then is till next time. Don't forget, these little videos are for educational purposes only, and in no way whatsoever should ever be taken as financial advice. I always suggest you do your own research, do your own due diligence, and of course, know the risks at hand before entering any trade. Till next time, every single one of you, trade safe.